Kia ora, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news the US Fed's interest rate rises haven't yet quelled enthusiasm in either their retail or labour markets, nor consumer sentiment, which is something of a surprise. American retail sales rose faster than expected last week on a same-store basis to be 14% higher than year-ago levels, picking up the pace and by faster than can be explained by just inflation. And the number of job openings in the US rose, and by almost 200,000 in July from June to 11.2 million, while markets had expected it to drop to 10.45 million. And American consumer sentiment improved, as measured by the widely watched Conference Board survey. And yesterday we noted the weakness in the Texas factory survey, but today their services sector came in positive for August. The US Fed is raising its benchmark interest rates, as we all know, and will likely keep at it with chunky increases for some time. But at the same time, they are pushing through quantitative tightening and now upping the withdrawal of prior monetary stimulus to $95 billion per month from bond markets. This is likely to have a compounding impact on core interest rate yields across the curve. Doing it both at the same time is aggressive and potentially quite risky. Across the Pacific, yesterday we noted in China that rains had returned to southwestern regions, but that they weren't enough to save agriculture or really break their drought. But they have lowered temperatures and reduced electricity demand. But now officials are worried that those rains might turn out to be excessive and come quite quickly, and have issued warnings about flash flooding as a possibility. And we should also note that the Chinese yuan is weakening quite quickly now too, down 2% since the start of the month, down 8.1% since the beginning of the year. There's a loss of face involved here. In Europe, Germany reported its August inflation rate overnight at 7.8%, which was slightly higher than they expected, boosted of course by the cost of Russian energy. On an EU harmonised basis, it came in at 8.8%. In Australia, building permits were expected to fall 2% in July from June, but they actually fell 17%, a huge miss. Year on year, they slumped 18%. Much of this is because approvals for new apartment buildings are now very weak, down 45%. But even for houses, the year-on-year retreat is approaching 20%. Rising RBA interest rates are getting the blame. And the US Treasury 10-year yield starts today at 3.12% and up 1 basis point from this time yesterday. And the price of gold will open today at $1,724 an ounce and down $14 from this time yesterday. And oil prices start today down $5 at $91.50 a barrel in the US, while the international Brent price is now $97.50 a barrel. And the Kiwi dollar will open today at 61.3 US cents and a quarter-cent dip from this time yesterday. Against the Australian dollar, we're still down at 89.5 Australian cents, but off a 5-year low. And against the euro, we're down to 61.2 euro cents. That all means our trade-weighted index starts today at 70.6 and a small retreat. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was